If you are new here and you have not met me before, I'm Allison Larson. I am the area manager here at Guild Mortgage. Guild Mortgage has been in our marketplace for honestly not that long, only about 2 years. And I came to Guild after being at a smaller bank model. And my specialty has kind of always been in condos. We have built relationships with people at management companies and people on HOA boards. And I used to think the company that you were at dictated so much about if you're able to get condos done or not. And now over time, I've slowly learned it is actually more of a relationship piece and understanding the guidelines. 9 times out of 10, the reason a condo becomes problematic or difficult is because the lender doesn't quite understand what they're gathering from the association and what these questions mean and why someone's asking for them. They go get pieces of paper filled out, and then they turn around and they provide them to an underwriter. An underwriter rips them to shreds, and they just say, I don't know, it does not going to work. This condo is not warrantable. In reality, usually there's solutions, we can ask questions. Sometimes there's simply just a lag period between an HOA board meeting and the actual commentary or information the management company has received. So a lot of times there's ways to figure things out. If there's not a way to figure things out, something becomes what most lenders say declined, dead in the water, we have no options here, when in reality, there's tons and tons of non-warrantable options. So everything I'm going to review today is just true to the Fannie Mae and Freddie Mac guidelines of condos. These are major changes that are happening. We'll go through them all. But I want you to know, just in case anyone hops off early or is half listening, this is the one thing I want to make sure you hear. If another lender in the next year, 2 years, I don't care, the rest of your life, tells you they cannot get a condo done, deal done, please do not take that as gospel. Please call me, text me, email me, and have us take a second look at it. All the time, we are able to make a business decision about condos and still get them done or move to a non-warrantable option. I'm going to talk a lot about non-warrantable options at the end today, but in case anyone has to hop up early, a non-warrantable option means that Fannie Mae and Freddie Mac just don't want it. It just means there's a smaller investor pool for it, but there is still tons and tons of options of investors that will take it. It's just a smaller pool, and typically they're making the decision on a risk assessment that's also associated with the buyer's credit and income profile. As a company, we have hundreds and hundreds of brokers that we work with. So I almost always can promise you I can find an outlet for your condo. It's just a matter of if the buyer still wants that loan option they're being offered or not. So promise me this, if you take one thing away from today, if you run into a condo issue, please just call me. But I'm going to deep dive into how you can stay ahead of these changes, what to watch for, what to be prepared for, all of that good stuff. A couple more people in the waiting room here. Okay. Why this matters. 70% of all mortgages are backed by Fannie Mae and Freddie Mac, which means millions and millions of people are going to be heavily affected when these changes go into effect. Pop it in the chat if you remember when the Surfside incident happened in Florida. All of these condo changes happened really quickly, and there was this crazy lag in timing of people knowing that changes were happening, implementing changes. Some companies implemented right away. Some people waited. There was just a lot of inconsistencies there. The future things that are happening here are going to create the same issues. You're going to have some people who wait till the final deadline and don't implement because they just haven't been paying attention. You're going to have some companies who are overcautious and start implementing now. And you're going to have some who honestly wait to implement, and I don't know why, go run the risk of trying to, they'll literally not realize these changes happened and go sell a loan to Fannie Mae or Freddie Mac, and it'll get declined to them. And that will be the first aha to them that they had to follow these changes. So when you see discrepancies over the next 6 months of who's allowing what, that is why. By the way, you guys, at any point in time, if you have a question, feel free to pop it in the chat. Or, of course, as always, you can always follow up with me, call or text, and we can chat through it. The biggest changes that are happening in this and these new changes in August are the limited review is essentially going away. A limited review was what was allowed if someone was putting down 10% or more. If we had a tricky building, our first instinct was, can your client put jump from 5% down to 10% down. Half the questions on the condo questionnaire go away. We don't care about budget as much. We don't care about reserves as much. We can ignore some of those questions and we can still get the deal done. That will completely go away. The other thing that's tightening up is the reserves are going from 10% requirement to 15% requirement. If you are an agent on this Zoom and you have not talked to, and you sell a lot of condos and you have not talked to the HOA boards, please note these changes got announced not that long ago. And if your HOA board only meets with their management company twice a year, the management company maybe sent a bulk email out but hasn't called them all. They literally might not know that these reserve changes are happening, or they might not know why it's a big deal and it'll be hard to get financing and that might affect their sales prices, right? So my recommendation would be immediately after this call, if you know anyone in a condo building, any of your past clients, make sure that they're having conversations with their board about the new reserve requirements. This will be the biggest issue. Good news is that now, before we used to kind of not worry about a condo if it was 4 units or less, now that's expanded up to 10 units. That's really, really good for us because usually the buildings that are hardest to hit reserve requirements with or that don't have the bylaws quite right and some of that stuff is these smaller buildings that are 5 to 6 units and they just like there's only a couple people, they don't want to spend the money on it, they don't think they have to, someone hasn't bought and sold in the building in a long time, and so when someone goes to sell it's a big catastrophe. So now we can ignore most of these rules as long as there's less than 10 units in the building. Insurance. I'm sure most of you, pop it in the chat, have had a catastrophic issue with insurance in some of these condo buildings lately. These issues are going to get better. So there's been a ton of issues with deductibles and roof replacement costs, and if we can have the full cost in there, if it can be cash coverage, they're essentially saying we see it, we know it's an issue, we're gonna let up on some of that. In Minnesota, that's about half our issues. The other half of the issues have to deal with wind hail coverage. 9 times out of 10, the reason that insurance isn't, it's not that the insurance they have isn't right or isn't good. It's just that no one's communicated to the insurance agent, specifically the verbiage that has to be on the insurance policy of the insurance cert they send us to make it Fannie Freddie approved. Most condo deals we fix, it's because I just took the time to call the insurance agent and say, can you add this line right here so that this can be Fannie Freddie approved? They just didn't know because they don't do condo buildings and this is their sister's building they live in and they got the insurance policy for it. So that is usually the biggest issue. So hopefully now between these two changes, we can leave up on some of those issues. Another huge one is they're going to ease up on the investor concentration. So typically investor concentration is limited at 50%, meaning one individual can't own more than 50% of the building, and now that is going away. Okay, so reserve requirements. We were at 10%, now we're going up to 15%. So example right here, if a building is collecting $1 million a year in HOA assessments, now they have to set aside 150,000 for reserves, up from 100,000 in reserves. If they come to us and they don't have that amount in reserves, they're now a non-warrantable condo. Most buildings will be able to overcome this, but there will be a lag time from when they find out the information, when they meet with the members and vote on how they're going to remedy it, and then when that actually comes into play and how long it takes. I would say about 90% of the condos that we review are only at the reserve marker because they're not keeping extra funds. Most large buildings downtown are above and overfunded in reserves and shouldn't have an issue. Typically, the rule of thumb is the larger the building, the more sound they are in reserves. The smaller the building, the smaller the unit count, the more closer to the threshold they keep the reserve study. Talking about transition timeline. So I said you're going to see some banks implement these changes right away. The black and white rules are if a loan closes after August 2nd or after August 3rd, we have to have reviewed all of these documents. We have to do a full condo questionnaire. We have to do a reserve study. Someone asked, does this also apply to CICs, including townhomes that are CICs? Really good question. How we decide if something is a true CIC is when we go to the tax transcript. If there is a lot and block, we do not have to underwrite it as a condo. You're good. You're safe from a lot of these things. If there is not a lot and block, it doesn't even matter. If it looks and feels like a townhouse, but there's not a lot and block and it says CIC, then these changes apply to you. And then January 4th is when the reserve rule kicks in. So if you have time now to communicate with people and get these things going, we'll be in good shape because we can get these buildings up to standard before this happens. So if you have a listing coming up, you have a client who knows is going to sell, it's imperative that we're reaching out to them now and staying ahead of this. If you want to have me talk to their HOA board and explain these rules, if you want to just remind them to call their management company, all of that, as long as we can get as many of these condo owners up to speed and knowing that these changes are real. One of the common things I get, I'll speak sometimes at downtown stuff for HOA communities and things like that. And some of the buildings downtown, they have a higher average price point. And the owners will say, well, most of the mortgages in my building are over an 800K loan amount, so they don't need Fannie Mae, Freddie Mac approval because they're jumbo financing. That's not true. Most jumbo mortgages still default to Fannie Mae or Freddie Mac guidelines. So if you sell a jumbo loan to Chase, right in the guidelines, it'll say follow Fannie Mae condo guidelines. So really, really important that we're communicating that correctly to everyone across the board. Before I keep going, any other questions you guys want me to tackle? Feel free to pop it in the chat. Okay, so warrantable versus non-warrantable condos. Well, Allison, you said you can still get a non-warrantable condo done, so why does it matter? A warrantable condo means we can just do a standard 30-year fixed, run-of-the-mill, standard interest rate loan. When we flip to non-warrantable, we are taking the package of this loan, all the ugly, showing all the holes in the project, and sending it out to investors and saying, who wants it? If the client is really, really solid, more people are going to want it. If the client's a little shaky, less cash heavy, and the building sucks, less people want it. The less people that want it, the higher the interest rate someone is going to charge. They know I'm probably one of three companies that's going to take on this loan. And if they really, really want the place, this is what they're going to pay for it. It is not us that decides it. It's not anyone that decides it. It's just this random investor who says, if I'm going to take on this risk of them maybe foreclosing because they can't sell their property and this doesn't get fixed or whatever, too bad, so sad. This is the interest rate you get. And most non-warrantable condos are going to insist that you have 20% down or more than that. Those who have been in the business for a long time, Richard Newman, some of my condo pros on here, have been through a market where they recall that at one point it was hard to get condo financing. And what happened was all of a sudden you had investors coming in because the only person who could buy these units was cash investors, and they could get a good deal because these people desperately needed to sell. That's what we want to avoid because we want to, of course, protect people's equity in these condo units and make sure that regular financing is still available in the building. Typically, on a non-warrantable condo, an interest rate will be 0.5% to 1.5% higher, depending on the buyer's financial picture and if there is reserves in the building. There's, like I said, fewer lenders, so there's going to be less competition for the loan, so they know they can charge more. Larger down payment is required. And of course, when someone has to say downward pressure, I know I can't turn around and sell this unit right away, blah, blah, blah. Of course, that's going to put downward pressure on the sales price as well. Another thing to point out, if a condo is non-warrantable, there is no chance they're getting any down payment assistance, bond program, FHA, nothing like that will fly. It really truly has to be non-warrantable with a large chunk of cash down. So, okay, how do we protect ourselves from this? Some of this we already talked about. How do we stay ahead of it so we don't have this crazy scramble like we did a few years ago in the market? More due diligence. I would say some people are condo experts and they know they have to get the documents ahead and to talk with the management company and stay ahead of this stuff. They'll contact other agents in the building who have recently sold something. And then there's other people who maybe this is their first transaction, maybe this is their first condo transaction, and they just don't know to do those things. This is what I recommend is always reaching out ahead of time and asking for the budget, asking your sellers to request meeting minutes, things like that, so you can stay ahead of it. And lately, we've had a lot of agents sending us stuff on their listing ahead of time saying, hey, Allison, can you check Fannie Mae's website and see if this is CPM approved? Most people don't realize that there is a Fannie Mae portal that lenders can log into, and we can see if something has been sent into Fannie Mae and has been rejected and why. We can see if Fannie Mae has not reviewed it or if it's fully approved. If something's already fully approved by Fannie Mae, that lasts for a certain amount of time. And as long as I can show that generally nothing has changed in the building, we don't have to do that same level of review. It's the world's easiest loan to get done. If it's never been reviewed and we want to sell it to Fannie Mae, Guild as a company, we take on the risk and we say we trust ourselves enough that we're going to review it first. And if we say it's good, it can close, and then we'll send it in for approval with Fannie Mae so it doesn't take as long. Some companies, if they don't have servicing and enough money to say if something goes wrong, we got it still, they can't do that. And they have to send the full package into Fannie Mae before they'll close the loan. Of course, that takes more time. It gets really nitpicky. And that's where usually I get the panic phone calls of, uh-oh, something seems like it's going south with this condo transaction. The lender is asking for crazy stuff. Of course, we also know that if a buyer gets excited about a property and it wasn't disclosed up front, it messes with them psychologically when all of a sudden they think their interest rate's going to be 6% and now their rate's 7% to get financing. In a lot of cases, maybe that's $100 and they love the unit and it's not a big deal, but it's way better of a buyer experience when they're prepped for that in advance. And we can go in with that knowledge when they write the offer so they don't feel like they had the rug pulled out from underneath them. And of course, if you are a condo expert and you want this to be a bulk of your business, this is a great time to stay in front of these HOA boards and become the trusted resource in these buildings to be taking these conversations to them to begin with. If you have any of those connections and you ever want me to come speak about this with you at one of their HOA meetings, I've done that a lot of times. They do virtual meetings and we'll zoom in and we can explain the changes to their board. And then, of course, when someone goes to sell, they all know that's going to happen. And then we're the first trusted resources that get that phone call. So your winning strategy, one, building a checklist of exactly what you should be asking for before you take on the listing. And then hopefully when you're having a buyer out looking at condos, going to the selling agent and saying, hey, do you have these items ahead of time? Do you know if there's any issues in the building, etc. Partnering with a lender who actually knows condos is huge. If you've ever been on the other side of a transaction, you can see the lender thumping along. Sometimes lenders literally don't order condo documents until the file has been in underwriting and the underwriter requests the condo documents. That means if something goes wrong, there's probably 1 week before closing to fix it. That's why closings get delayed and things like that happen. At Guild, we order all condo documents as soon as someone goes under contract, and we actually have an upfront underwriter review them separately so that they can be reviewed ahead of someone signing disclosures and before we even have the appraisal done, so that all of those things are happening simultaneously. And if there's any issues, hopefully we have a whole month to fix it versus waiting until the final wire. And staying ahead and educating the seller's agent and the buyer's agent. I see a lot of big names on this call, but we all know not all agents are created equal. Some woke up yesterday and decided to sell their friend's condo and have no idea these changes have happened. So if you run into that situation, I'm happy to be a resource and connect with whoever and explain these things and keep them up to speed as well. Knowing the non-warrantable options and knowing people who are familiar with those. It used to be you had to work with a small bank to have those non-warrantable options. Now, a lot of the best non-warrantable options are actually through larger companies and to these brokers. A lot of the banks now, their books have gotten more heavy as interest rates have come up. They don't want as much of their money into these types of projects. They'd like to save it for the self-employed borrowers and things like that because they can move their business banking and they can capture them as well. A portfolio loan for a small bank of someone who's buying a 300K condo who all their money is going to the down payment isn't as appealing to them anymore. Typically, small banks also will only offer ARM products for your average first-time buyer or even move-up buyer. In today's market, an ARM product doesn't sound as appealing to them. And so they're usually looking for 30-year fixed options. We have a lot of still 30-year fixed options for non-warrantable condos as well. So don't get it in your head that they can't have a 30-year fixed loan just because it's non-warrantable. They totally can. That's not a problem. Another cool thing about these non-warrantable loans is it's really easy too. If someone knows they can't sell their, you find a condo, now we've found out it's non-warrantable. We just have had most of them going back to the sellers and saying, okay, but can you give me 3% seller pays to get to the interest rate to keep this as a net neutral so my payment doesn't go up? So that's a really easy solution to this as well. Reminder and going to those buildings that are under a certain threshold. You guys, there's an insane amount of buildings in the Twin Cities that were 5 units, 6 units, 8 units, don't have the money for reserves, don't have bylaws in place, all of these things, and owners are stuck in those buildings. They have them as rental units right now because they weren't able to sell them, and it was easier to rent them out to cover the payment because they couldn't sell and they didn't want to lose money on it. Now is a great time if you want listing opportunities to be reaching out to people in those buildings and saying, good news, things are changing for you. This is a big opportunity. And all of these things combined is how I'd recommend if you want to focus on condos, really truly being an expert on it. I personally, I always joke, it's much easier for a condo person to go into the burbs and sell a single family home than it is for an agent who's never been downtown Minneapolis to show up downtown and try and sell a condo in the North Loop. They're very different games. And so making sure you're staying ahead of these things and watching trends in the buildings so that you can stay attuned. It's always amazing to me that you'll get a listing in a building and you'll look at when the last time something is sold, and sometimes it's over a year ago. So the guidelines of condos would have been completely different at that point. If anyone wants to snap a picture of this, I created a little buyer agent checklist and listing agent checklist. I'll leave this up for a second so you can just screenshot it. This would be my little to-do list. If I'm a realtor, these would be the things that I'm checking for. One of the big things that blow up a transaction is these meeting minutes. So when all of these changes happened after Surfside, a new condo questionnaire was pushed out by Fannie Mae and Freddie Mac. What's interesting is most management companies don't answer actually all the questions on the condo questionnaire. They'll leave them blank because they don't know the answer, and legally they can't answer them on behalf of the HOA. And the HOA has been instructed to, you can't make a best guess. That could put you in a legal issue. So just leave them blank. For example, if you haven't had your building inspection done and you can't speak to any pending special assessments or work that has to get done, they'll just leave that blank in general. Some lenders will decline the loan then and there because they don't want to take on the risk of reading between the lines. Larger lenders will then move to the next step of getting meeting minutes. Meeting minutes can say crazy things in them, right? It could be, hey, we've got this crazy lady who we think is going to schedule a lawsuit against the building because someone's dog peed in the lobby, all sorts of crazy things we see in these meeting minutes. Some of them might mention potential structural issues or upcoming special assessments. So the number one thing to look at is typically the meeting minutes. Normally, meeting minutes have to be ordered by someone in the building. So I love when we have a good agent who was proactive and already asked the seller to get copies of those meeting minutes, because then we can take a tricky situation and we can go find the meeting minutes and go, oh, we can see right here, this pending litigation, they know it's not a safety concern. It's a crazy lady whose dog peed in the lobby. We're totally good. Things like that. Any questions on this part so far? Good? Okay. I promise I'm almost done, you guys. Okay, so key dates and next steps. Now, moving forward for forever, if it's under 10 units, you're totally good. This stuff goes by the wayside. So if you're feeling slow this spring and you've got some friends who you know couldn't sell their condo unit because of issues in the building, call them up, get them ready to sell. Let's push some more inventory on the market. Sounds awesome to me. August 3rd, this is when the limited review will officially go away. Every single Fannie Mae or Freddie Mac loan will have the same condo questionnaire on it. You can literally Google what the questionnaire looks like if you wonder, and everyone will be asked the same questions. January 4th is when the minimum reserve requirements will go from 10% to 15%. If every single person on this call can go share with every realtor in their office, if you have a condo listing coming up, please, please, please share with anyone you know in a condo building that this change is coming. Let's let our industry get ahead of it. Let's avoid the panic. Let's support our past clients and these people who trusted us with their investment. Let's make sure that we're protecting their equity in these places. As always, you can always reach out to me with questions. You can always send me condo docs ahead of time. We actually have a person on our team now where if you send condo documents, they're going to take your condo documents and they're going to send them to an upfront underwriter upfront, whether it's a transaction we have active or not, and have the underwriter review them and pick them the heck apart so we can give you a forewarning on any issues we see before you list that property. So please, please, please take us up on it. We are here to help you. Any other questions before we wrap up here? This was a lot of information in 30 minutes. You're going to get a recording of all of this later today, so you can refer back to it. You can refer back to the checklist, share it with a friend of yours who does condos, whatever you see fit. Like I said, I want your number one takeaway to be from today. If you have an issue with the condo building, please call me. My cell phone number is all over the internet. My Instagram and my Facebook are probably all over your social media pages. I am here to help support you in any way possible. I love helping our people win. I love helping my realtors grow their business. I love helping that client who got discouraged and frustrated. I should probably seek therapy that I love to like throw the cape on and get someone to the closing table when no one else could do it. But I'm here to support you guys in any way possible on a listing side, on a buy side. Please, please, please do not hesitate to reach out. You can even get condo docs and email them directly to me, and I will, with no explanation, and I will immediately know what to do with them and can take a look at them. If you send me stuff and it's not the full package, I'll tell you exactly what we need to continue to review. We are here to support you however we can. Please forward this when we send the recording. Like I said, if there's another agent in your office who works on condos, we want to support them too. Let's make condos approachable and still a good investment for our past clients and future clients. Thank you guys for hopping on today. Have a good day.